Hey guys, welcome back to another week here at Financial Hub. So today I'm going to talk about market analysis. We're going to break down the markets. I believe Ken did a solid work last week, sharing with you his analysis, his idea of the markets, and I'm going to share mine this week. If you've been following my Instagram account, which is Caleb Sammy Trades, I've been I shared the last trade that I took. I believe that was on gold. I made about 500 pips on that. It was a good trade, and I shared it live when I executed it on a Thursday. I shared the updates that I had, and today finally when I closed it, which is on a Monday today in the morning. Okay, so first things first, then I'm going to explain what I did and how that trade worked and what other things I'm looking at, because as the month is coming to an end this week, I don't have much really on my plate with what I'm watching, which is totally fine. So this week I don't have much in terms of fundamentals. So you have consumer confidence, CPI, Australia, this is US and Europe, all those. For me, these are not really important market news that really affects markets that much. It's important to pay attention to them because for those who trade pro firms, you know what happens during news times, so you have to pay attention to those times. So as much as I may say I don't trade the core PCE price index month on month, I still need to pay attention, because if I execute or get any profit during 3:30, depending on the time window of the prop firm I'm using, then I can have a breach loss or profit on that one. So I do not want that to be the case, even if I don't, and that's why I pay attention to the news, just in case. Other than that, so here's what we have on gold. This is what I had. I took my profits today morning at 25.25. But what was the thought process behind this? Because last week Ken is one who shared his analysis. So for me, I'm heavily a trend follower. So you can see on the daily chart, I always use, my time frames. Daily, 4 hour, 1 hour. Daily acting as my higher time frame, giving me the big picture. 4 hour acting as my trading time frame, giving me the patterns that I'm looking for, and then 1 hour acting as my lower time frame for executions and entry points for trades. So this one, what I had on this one was a daily. It was moving to the upside. You can see markets broke to the upside. This was last week. The other week on Friday, we broke above the 2500 barrier and even higher. Markets went all the way to an all-time high of 25.30, and then after that market started getting a bit of a correction along the way. So if you go down to the 4 hour chart, I already know the direction. On the 4 hour, markets came and corrected in the form of a flag. You can see this correction here, better seen on the 1 hour chart, so you can see it here much more clearly. So here you can see it, and you can see I looked for a really extreme point. Now I saw many people taking this trade when market was still here. Let me show you. This is gold. So if I go back on that one, on the 4 hour chart, you can see it's not that clear, and that's why I didn't get an entry there. I wanted to look at it much more clearly. So I use the 1 hour to confirm the flag. I don't use the 1 hour to give me the flag, if you get my point. My flags or any pattern I'm looking for is on the 4 hour. The 4 hour is more precise, more legitimate, and more significant, but I use the 1 hour to get those early entries. Now, there's a mistake I saw a lot of people doing. This flag was sort of like this. So immediately markets had fallen. Okay, remember we fell here below the 2500 mark. When market was falling, immediately I started seeing people on this close. Immediately they started buying. Now that wasn't so smart of you, because you have to wait for a clear indication, clear rejection of a key level, clear rejection of a support level. So markets pushed lower to get that support at that level, and then that's where I ended up taking a trade execution. Okay, so you want to be trading in the direction of the trend. That's what happened on the 4 hour chart. You can see markets move to the upside after that close, because I waited for New York to open. So around 5 to 6 is when I waited for that clear entry signal, and then I took the buy signal after that close. Okay, so that's what happened on this one. Trade ran to the upside, exited at the 25 level today morning. Then now you're looking at USDX. You have USDX on the daily chart moving to the downside. You can see markets are moving, forming lower lows and lower highs. to the downside. So you can see lower low, lower high, lower low, lower high, lower low. So like this one, if I go to the daily 4-hour chart, nothing much. It's just market have been moving to the downside. So for a lot of dollar pairs, now if I go to GBP USD, Aussie dollar, Euro USD, you're seeing markets really moving to the upside. So Euro USD, which is highly correlated to the dollar index, you can see that market has strongly been moving to the upside, breaking above the 2023 key level here that was formed in December. Okay, so markets quickly came back to that level. We've broken above, and we could possibly see these markets continuing to move up. Now along the way, of course, we expect some corrections. Markets never just move, never just rally. Okay, but I'm never that person. I'm never the person who's going to try and catch a top. And my students also reminded me that I keep telling them, never try to stop a charging bull, never try to catch a falling knife. On USDX, dollar index, NDX, okay, I'm not trying to say, okay, this is a bottom, I think this is a key level, I expect some corrections. It could happen. I'm not trying to find out whether it can happen. And that's the same case with Euro USD. It could correct, but I'm not willing to be the person to find out whether it's turning at that point. So trade in the direction of the trend. When it's trending to the upside, I look to buy. When it's trending to the downside, I look to sell. So on this one, on the 4-hour, you can see markets have just been at extreme, moving higher, high, higher, low, higher, high, higher, low. Currently, market is at a higher high. So waiting for a solid correction. I don't believe I'll get any solid correction. These days, I know. I'm trading the 4-hour. I know how long corrections take. I might not. So like I said, I never say never. I'll be very still keen on watching the markets every single morning, waiting for a new setup to form a correction. But until then, I'm not looking to get anything on this one. GBP USD, the same. Markets are extreme levels. Okay, by the time a whole correction is formed on this one, that's sometime in September. This month I've only gotten 2 trades, and that's been on gold only. Okay, one worked, one failed. All these other pairs, you can see all this time since August, market has just been moving up. No clear correction along the way. Look at Euro USD also. I haven't gotten any flag correction along the way. Aussie dollar, same thing. Markets have just been rallying. We got a third trendline bounce, but the pattern that I trade ever since we bottomed here, market hasn't given me that. If you remember my last analysis, I talked about market spiking here, coming to spike again down here before we get any correction. But this time markets proved me wrong. Okay, and that's totally fine. Markets spiked down there. And I remember when I saw the daily chart close, was it the daily chart or the weekly close? I knew markets wouldn't go back down there. This weekly close here, you can see this solid rejection, this solid candlestick, and then that follow through. Okay, that was a clear indication that markets weren't going to come back to that level. I was to do an analysis last week, but Ken did it and updated you guys. But for me, I was totally wrong on that one. Markets actually rejected this level, gone back to the 2024 highs, as you can see here, and possibly markets could even push much higher on this one. So that's what happening on this one. So no trade yet, just waiting for a correction first, waiting for a clear correction to come on these markets before we get any execution to buy or to sell, because markets could also possibly change direction and start moving to the downside. But I normally wait and see and take the direction that markets will give me. So like I said, GBP USD, Euro USD, all the same thing. USD card, it's more or less the same thing, but on the opposite side, because the dollar on this pair is acting as the base currency and Canada as the quote currency. And you can see markets have been falling. Nothing much on this one, no major correction. Markets spiked to the upside, got that clear rejection. You can see how market has been falling ever since. Daily chart, you can see how that fall is. Markets rejected that 2022, 2023 highs, and markets have just been falling ever since, breaking structure to the downside. And the downside is now your trend on this one, because you can see structure clearly moving to the downside. So on my index pairs, markets also creating new highs. Markets fell strongly. You can see US 30 made the quickest recovery, almost going back to all-time highs, and pushing to the upside. So on this one, on the 4-hour, no correction on this one, waiting for a clear correction. Markets are pushing back up. We could easily see the $42,000 mark being hit very soon, or we could see a rejection of this level. May I wait for correction and trade that correction in the direction of the trend. We can see US 100 more or less the same thing, not quick recovery as much as US 30, but still recovering, but not as much. Okay, and US 500 more or less trying to catch up to the previous highs, sort of just lagging behind the US 30, sort of to create those all-time highs, eyeing $6,000 on the way. So on this one's no major correction, waiting for those corrections to form, and then we get those trade setups. Remember, when there's nothing to do, do nothing. When there's something to do, do something. And that's what I normally share when I'm trading with my students, sharing in the community that we have. Always do nothing when there's nothing to be done. That is also a position, because during that time, you're preparing, you're waiting for those trade setups, you're backtesting, you're building that confidence in your trade system and your trade ideas, what we call idea generation. And basically, we came to trade for the freedom that it entails and what it gives. So do other things as well. Go and do your hobbies and do other things. So nothing much for today. You can see I don't have much in terms of the fundamentals. I don't have much in terms of the setups that I have. Just took that trade on gold, took it for a good start of a Monday, and now I'm just waiting for new setups to be formed. If they come, good. If not, we wait for new opportunities next week, which is a new month, and we'll wait for that. But like I always say, stay woke, stay financially literate. I'll see you in the next video. See you soon.